cents a coin. I cannot imagine what news is accompanying to this. We're at 29 cents. We're off the charts. And here we go. We lost the Mt. Gox feed again. We still have not seen one buy. We're down to 12 cents, 11 cents. Wow. I don't know what this means, people. We are down to 1 cent. There's still no buying.
Hey there, and welcome to the channel. So today I wanted to dive into something that's always on my mind when I think about the crypto market. You've probably heard this before. Markets never die. But what does that really mean in the context of crypto? Let's start by talking about what we know. Crypto markets have seen their fair share of volatility. We've witnessed extreme highs and devastating lows, but through it all, the market has never truly died. It's like a cycle, and just when you think it's over, it comes back stronger, different, and ready for the next chapter. Think about the early days of Bitcoin back in 2009. At that time, Bitcoin was barely on anyone's radar, but slowly it started to gain traction. It went through several crashes, and yet each time it found its way back like a phoenix rising from the ashes. I think that's a good starting point to understand why crypto markets don't just die. In fact, Bitcoin's first big crash came in 2011 when it dropped from around $30 to $2 in just a few months. That was a massive blow, but did the market die? Not at all. It bounced back and fast. This first crash was a wake-up call for a lot of early adopters and investors, but it didn't signal the end of Bitcoin. It was just the start of a long journey. Fast forward to 2017, and we saw another massive surge in the crypto market, particularly Bitcoin and Ethereum. The hype reached its peak, but with hype comes correction, and in 2018, the bear market hit hard and prices plunged. This could have been another nail in the coffin, but instead, it was a moment of consolidation. The market cleaned out the weaker hands and made room for the next wave of innovation and adoption. What's important to note here is that the market didn't die, it evolved. It went through cycles of hype, correction, and innovation, and every time it bounced back, bringing something new to the table. We've seen this pattern repeat itself over and over. Let's talk about one of the most famous crashes, though, the 2018-2019 bear market. It wasn't just a simple market correction. It was the kind of crash that shook investors and caused a lot of panic. Bitcoin dropped from nearly $20,000 to under $4,000. The media went wild, calling it the end of the crypto boom. But here's the thing, that was just one chapter in the story. The market didn't die. Instead, it laid the foundation for the DeFi boom we're seeing today. In fact, it was during this bear market that the groundwork was laid for many of the projects we now consider staples in the crypto space, like Ethereum 2.0 and the rise of decentralized exchanges. Now, here we are in 2025. Bitcoin is still alive and well, Ethereum is undergoing its next major upgrade, and new projects are emerging almost every day. Despite the market's ups and downs, it continues to thrive. It's not because there's always something new, but because the core principles of decentralized borderless finance are here to stay. And when we look at the broader market, we see the same thing. No matter how many people say it's over this time or crypto's dead, the market continues to show resilience. Take, for example, the rise of stablecoins, NFTs, and the growing interest in blockchain technology beyond just finance. Crypto is expanding, it's adapting, and it's never going away. So, what can we learn from this? The main takeaway here is that markets, especially crypto markets, are cyclical. They experience periods of extreme highs, followed by painful lows, but they don't die. They evolve, they adapt, they change. But the fundamental idea of crypto, decentralization, freedom, and innovation remains intact.
This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents, all the way to $213, and then it crashed all the way to $70, all the way to $1,100, it crashed $239. So the moral of the story is don't buy Bitcoin because you know it's going to crash.
Now that we've talked about the resilience of the crypto market, how it's gone through cycles of highs and lows, and how each downturn only paves the way for something new and innovative, let's take it a step further. What would happen if markets did die? And what kind of symptoms would we see if the market was truly on its way out? Let's explore that for a moment, because understanding what might cause a market to die will give us even more appreciation for why crypto and markets in general seem to just keep coming back. 1. What does a market death really mean? When we talk about a market dying, it's not just about a temporary downturn or a crash. In the traditional sense, for a market to truly die, it would have to experience a complete loss of demand, a collapse of trust, or a breakdown in its fundamental infrastructure. For example, in the crypto world, if the underlying technology like blockchain were to become obsolete or fundamentally flawed, that would be a major sign of the market's collapse. The same goes for other markets like stocks or commodities, where an absolute loss of investor confidence or a complete breakdown in regulations could signal the death of a market. 2. Symptoms of a dying market. Now, let's focus on what we'd actually see if the markets were heading towards death. What would the symptoms be? What would the warning signs look like? Lack of innovation. One of the first signs that a market might be dying is a lack of innovation. If the market stops evolving, adapting, or finding new ways to deliver value, that's a red flag. Markets thrive on new ideas, new products, and new technologies. Without them, things start to stagnate. In crypto, this might mean a lack of new blockchain solutions, projects not pushing boundaries, or stagnant innovation in decentralized finance spaces. The market would no longer be as attractive to developers or investors, and that would eventually cause it to wither away. B, low volume and low liquidity. Low trading volume and lack of liquidity are clear indicators of market distress. In crypto, this would mean that fewer transactions are happening and there's no longer an active community of buyers and sellers. If the market can't find enough participants to keep the prices moving, the market starts to lose its pulse. A real-life example of this in crypto could be seen in a situation where Bitcoin and Ethereum no longer experience the typical price fluctuations we've come to expect. Instead, the prices move in narrow bands with little to no volatility. The thrill and excitement would be gone, and people would simply stop engaging in the space. C, a drop in market capitalization. When a market is on its last legs, you'll see a steady decline in its market cap. In crypto, this would mean that the overall value of the market in terms of total capitalization would fall drastically over a period of time. This could be triggered by massive sell-offs, lack of new investment, or even an overall loss of confidence in the underlying assets. For example, if Bitcoin and Ethereum start losing ground to new technologies or innovations, we could see altcoins take over while the original cryptocurrencies lose their influence, leading to a decline in total market value. D, regulatory crackdowns. Another key indicator that a market is in trouble is heavy regulation or outright bans. In crypto, we've seen countries like China take drastic actions by banning mining operations and cryptocurrency trading altogether. While these events didn't lead to the death of crypto, they're definitely symptoms of a market in distress. If more countries were to follow suit and governments started cracking down more heavily on decentralized finance, crypto exchanges, or blockchain development, it could lead to a global regulatory squeeze that limits the market's ability to grow or operate freely. E, widespread scam and fraud. When trust begins to break down, we see an uptick in fraudulent activities and scams. In the crypto space, we've already seen this happen with pump and dump schemes, fake ICOs, and rug pulls. If these became the dominant activities in the market, they would discourage honest investors and developers. If people start losing confidence in the integrity of the crypto space, we could see widespread abandonment by legitimate projects and individuals. The lack of trust would be a sign of the market's decline, and that could push the market towards its demise. F, loss of community and public interest. Markets thrive on their community. The developers, traders, and even the casual investors who engage with the system. If the crypto community becomes disillusioned, uninspired, or fractured, that would signal a slow decline in interest. In crypto, this could look like the diminishing presence of influential thought leaders, the closing down of development hubs like those for Ethereum or Bitcoin, or declining social media engagement around the space. 3. What if crypto really died? Now, let's imagine this hypothetical scenario. What would the world look like if the crypto market truly died? If it were to disappear overnight, we'd see a massive shift in the global financial system. For one, centralized systems would regain a stronger hold. Governments and banks would likely increase their control over digital currencies, potentially replacing decentralized networks with digital versions of fiat currencies. There would also likely be a technological vacuum in terms of blockchain-based solutions, including secure transactions and smart contracts. Innovations that came out of the crypto space, such as DeFi or NFTs, might be adopted by the mainstream, but without the decentralized aspects that made them revolutionary in the first place. 4. Final thoughts. Why markets never die? Here's the kicker. Markets like crypto don't really die. Even when it feels like they're at their lowest, they adapt, evolve, and find new life. Crypto, for instance, has already proven its resilience through multiple crashes, only to rise again stronger, more innovative, and more integrated into the global financial system. What keeps crypto alive, and all markets for that matter, is the need for change. No matter how much they fluctuate, how many setbacks they face, markets always find a way to evolve, whether it's a new technology, a new regulation, or even new players entering the space. Markets like crypto will always find a way to come back. So, don't be fooled when you hear that markets are dead. They're just going through another cycle, another evolution. And in the end, markets never die, they simply keep evolving. Thanks for tuning in today. If you enjoyed this conversation, don't forget to hit that like button, subscribe, and drop your thoughts in the comments. Until next time, remember, markets never die.